So I found a dividend paying stock that's paying 19+% as a dividend yield. Not only is it paying a fantastic dividend yield, but it's also rated as a strong buy by Seeking Alpha on its quant ratings. If you're into the stock market and you want to know more about dividend investing, this is a video you're not going to want to miss, especially with a dividend yield like 19+% and a strong buy rating. Are you kidding me? My name is Paris Clough. This is Financial Self-Reliance. Welcome to the channel. I absolutely love helping people manage, protect, and grow their money. Each week I'm sharing with you a video on my dividend journey. I'll put a card up here and I'll put a link in the description below, but I'm sharing in my dividend journey where I'm actually whittling it down to the top 2 or 3 stocks positions that I want to have in each of the sectors. So right now I'm talking about the industrials sector. I did everything starting in alphabetical order. I've already done all the sectors up to industrials. Next video I'm going to do is going to be on information technology. I'll make sure to link the video in the end tabs for you to be able to check it out, the video that I did last week on healthcare. Let's go quickly to my portfolio, my spreadsheet. This is my portfolio spreadsheet. This is the one that I created when I first started my investment journey. And so over here on the right hand side, you can see where it says industrials. This is the sector we're going to be talking about today. And I had 5 positions, and it was 3M, MMM, ticker symbol GOGL, ticker symbol IEP, ticker symbol MSM, and ticker symbol HI. So let's jump over here to this. This is the Dividend Tracker. I highly recommend you have something similar to this that you have access to. I want to jump into the 3 stocks that I sold to be able to buy into the one that I'm going to share with you at the end. That's the 19% yield with a strong buy on Seeking Alpha. And then the other position that I kept is going to be one of those ones that's just one of those strong, solid positions that everybody should have at least in their watch list. So the first one is IEP. IEP has a 24 out of 100 dividend grade. They have a fantastic dividend yield, which we'll talk about in a minute. But one of the reasons why I didn't like ICANN was because of the LP right here. That means limited partnership. And the LP gives you a K1 at the end of the year. When you have a K1, that means you have to do different taxes, and your CPA, if you have one, is going to require you to fill out more information, or he has to fill out more, or she has to fill out more information, and it's just more time consuming and it's more costly. So I wanted to get out of all of the stocks and positions that I was holding that had limited partnerships. Maybe I'll keep one. There's one I'm going to keep, but I had 4 or 5, and I'm just getting rid of all of them but that one. So anyways, ICANN Enterprises, they $48 a share right now. Their dividend safety is a C, dividend growth C+, dividend yields A+, dividend consistency C+. They have a 16% yield, you guys. So it's a fantastic company to be involved with. If you're looking for a 16% yield and you're not too concerned about K1s at the end of the year and you have enough money to buy into it and get several shares, it may be worth holding on to, it may be worth having. So it's got a almost 6% growth rate, 5-year growth rate, zero on the dividend growth. And the payout ratio is pretty concerning, but you know they've been doing it for a while. I've been getting the dividend for probably 2 years now, but I've decided to finally get rid of this company. The ratings over here, Quant has it as a buy, Wall Street has it as a strong buy, so it's definitely one I'm going to keep on my watch list. And the next one I sold was MSM, and that's a 58%, 58 out of 100 on the dividend grade. I'm going to definitely have that on my watch list as well, because it's a good company. They have a nice yield. Seeking Alpha has them as a dividend safety of a B, dividend growth is an A, dividend yield is an A, dividend consistency is a B-. 4% dividend yield, 53% payout ratio, which is healthy, 11% 5-year growth rate, but 0 dividend growth. So you want to have a company that's going to give you dividend growth year after year, or that consistent dividend growth, because that's where the consistency comes in really helpful. Is in that dividend consistency, is paying out year after year and increasing those dividends. If a company is increasing its dividends out to its shareholders, you know it's in a good, solid, strong financial position. The next one here is HI. HI is an 86 out of 100, so I'm definitely keeping that on my watch list up here. I'm going to put that down as one of those companies that I need to maybe take a look at in the future and keep on my watch list. So dividend Seeking Alpha has the dividend safety is a B, dividend growth is B+, yield is B+, consistency is B+. Dividend yield's 2.12%, so it's not got the best yield in terms of what we've seen so far, but that's still a good yield. Payout ratio is 22%, which is healthy, lots of room for growth. 1.19 5-year growth rate, and they've increased their dividend for 13 years in a row, which is really a good story to tell, because if you are increasing your dividend, you know you're a good, strong, solid company. All right, so the ones that I kept, the 2 that I kept, I'm going to share with you the first one here, which is MMM or 3M. Everybody, this is one of those ones that you see it everywhere you go. Everybody's portfolio seems to have some 3M. at least on the watch list. You should have it on your watch list. So they have a 79 out of 100 grade here. So it's a fantastic grade. Let's take a look at what Seeking Alpha has to say. So Seeking Alpha has them as a B for dividend safety, A for dividend growth, A for yield, A plus for consistency. You can't, if you're a dividend king or 160 for 63 years, you've increased your dividend consistency better be A plus. So this is a fantastic company. Dividend yield 4.6%, payout ratio 59, lots of room for growth there, really healthy. 5-year growth rate 6%, still very healthy, very nice 5-year growth rate as well. $1.49 a share is what they're paying right now. That's a 4.61% growth rate. 3M, look at the summary here. Look where it's trading at 129.84 today, but back here it was $199, $200 a share. This was just back in September of 2021. So not even a year ago, we're looking at $200 a share. Now it's $129 a share. So it's down $70 or $80 a share. This is definitely worth picking up some shares, especially now if you have a platform like Webull that you can buy fractional shares. If you have M1 Finance or Webull, whatever one, they're all in the description below, by the way. You can buy fractional shares. Get yourself involved in 3M. It's one of those strong, solid dividend kings that you're not going to be sad that you got involved with them. So before I share with you the last one that I wanted to share with you, which is the one that pays 19%, I wanted to take you over here to my Facebook page. I have a Facebook group that I would love to grow this group. I would love to get more people involved, more conversations starting, more things happening, more information, more sharing, and spreading the word about financial literacy, getting more and more people to become financially self-reliant. So I'd really love it if you'd come. It's called Manage, Protect, and Grow Your Money, Personal Finance and Investing. It's a group by Financial Self-Reliance, which is actually my Facebook page. So if you come to the Facebook page and like the page too, I'd really appreciate it. I'm going to start putting out some more content on there as well on a regular basis that you're going to want to enjoy. I'm also on Instagram and I'm on TikTok, Financial Self-Reliance. So come check me out in some of my areas and my socials. So last but not least, and saving the best for last, this is the company that I bought 95 shares today of GOGL, Golden Ocean Limited Group Limited. This is they have a 48 out of 100 dividend grade, so they're just under half. Their dividend yield at Seeking Alpha, check this out. Dividend yield at Seeking Alpha is 19.12%. That's fantastic. A payout ratio is 95%, so not a ton of room for growth. Dividend growth is 1 year. They have a 1-year growth rate, which is nice. So dividend safety is a C, dividend growth is an A minus, dividend yield is an A plus. So the A minus means that the attractiveness of the dividend growth rate when compared to peers. So it's a really nice dividend growth rate that they're actually projecting here as well. Dividend consistency, its track record hasn't been the best, but it's still a D plus, not an F, thank goodness. Hoping for a little bit better dividend consistency in the future. However, at $10 a share, you really can't go wrong. You buy 100 shares, you got a round lot, you're off to the races doing covered calls or whatever you want to do. And Quant over here, check this out, ratings summary. So Quant, which is Seeking Alpha's proprietary information, their ratings system, it's got these huge amounts of algorithms. They've been really accurate at predicting the growth of different stocks. One of the good things about dividend stocks, especially if you can get into one that has a growth potential and a dividend yield, you're getting the best of both worlds. So with Seeking Alpha's Quant rating here, it's a strong buy. That's rating it on its growth potential, on its ability to kind of be a strong, solid future investment. On top of that option, now we have the ability to have a 19% dividend yield. Are you kidding me? So I figured I'm going to go and get 100 shares of this. Now that I have 100 shares of GOGL, I'm going to start building my 3M position up more and more so that I can get more 3M involved there. So I hope that this video helped you kind of get an idea of the industrial sector, how you can kind of do a little bit better research on which companies to add to your portfolio, recognizing there's 11 sectors to be properly diversified across each of those sectors so that you can make sure that you're doing what you need to do. If you have any questions, do you have any thoughts, or if you're involved with any of these companies, have you heard of GOGL? Do you have it in your portfolio? Do you have it in your watch list? If you don't have it in your watch list, are you going to add it to your watch list? I really appreciate you taking some time to spend with me today to watch this video, to learn more about dividend investing. I would love to get this portfolio to $1,000 a month and then even grow from there. So over the next couple of years, I want to get this thing to 100. I'm almost at 100 a month. Then $200, $300, $400, $500, $1,000 a month, and then continue to grow this thing until it's a significant passive income for me. So I appreciate it. If you missed the last video I did, you can watch it here. Go ahead and subscribe to the channel up here. Check out this video that YouTube thinks you might like. And until the next time, have a great day, and I look forward to seeing you on the next video.